markets and whether or not we are going to see a spurt in the markets, even though it might be backed by some amount of cautious optimism. Let's get perspective. Geoff is an independent emerging markets commentator who joins us regularly on the show, along with Anurag Singh, managing partner at Ansett Capital. Both of us, of course, both of them have been regulars on India Tonight. Great to have you with us with your perspective tonight as well, Anurag and Geoff. Anurag, coming to you first, do you believe that now that we've seen inflation in India climb down to more comfortable levels for the RBI, do you think it gives the RBI the breathing room that they need to give growth a bit of a fillip at a time when really India needs to seize that opportunity and rise, don't you think?
Yeah. Vikram, look, RBI always had this breathing room. I think in terms of inflation, 7% inflation in India is not unusual. It is not unprecedented. And also, I think the range between 2 to 6% is not actually inflation targeting. It's as vague as it gets. You see, because 2% is the inflation targeting in developed economies, 6% is in emerging economies, and maybe 4% is in mid-income countries. Now, saying we can target between 2 to 6% is basically saying nothing. So RBI is kind of the agenda. The inflation targeting is as broad-based and as vague as it can be. And so RBI always had this breathing room. I think the reason RBI was hiking the rates was to really preserve the rupee levels, because I think if the Fed raises rates, they have to constantly kind of raise rates in tandem. And that's happening across the globe, right? And that still stays open. That risk still stays open. We'll have to kind of follow the Fed. But otherwise, I think with respect to Indian economy, I think RBI always had that breathing room, my judgment.
Geoff, if you are hearing what Anurag is saying in Shania Twain style, he's saying that don't impress me much, the kind of inflation numbers. The RBI, he says, always had this kind of breathing room. From your understanding of emerging markets, currently where we are poised in India with the kind of inflation numbers that we are looking at, I'm not sure how much you've tracked our core inflation, but some argue that it has proved too sticky. Would you agree that it has been the case? And do you see any change in the RBI stance in the making now that we may be past the lag of liquidity tightening measures?
I think it's worth pointing out that core inflation everywhere is more sticky than headline inflation is, and that's because a lot of the boost you've got in inflation around the world over the last 12 months, 18 months has been due to things like commodity prices, food prices, which are not necessarily part of core. So it's no surprise really that core inflation in India is more sticky than headline, and that's true in the US, and you can see that in the data also. I think it's also worth pointing out that with this latest drop in inflation in India, and given where interest rates are, real rates in India are now positive. Which is also very good, because they're not positive in the US yet, at least in terms of if you compare the Fed funds rate with the 12-month inflation rate. So if you put those two things together, I think as my friend has said here already, that I think RBI is creating quite a bit of room eventually down the road to be able to react to further declines in inflation. Now, I think it's also true of emerging markets at large. I mean, not everywhere, clearly, Turkey being an obvious outlier where monetary policy is awful and far too loose. But you look at Brazil, which pushed up interest rates at one point to 13.25% and moved very, very early. So I think there's a lot of room here, ultimately, especially if the dollar goes down, which is part of my narrative for 2023, for these countries, these central banks which moved early, got on top of inflation falling, real rates being quite high, to start to move those rates down. And a stable, U.S. market, which I like at this level, plus a weaker dollar, all of that, I think, is helping the narrative very much.
And we'll see how much, but Anurag, the Indian budget, now that's just around the corner, and of course we are going into election year as well, so there is that much more focus on it. It's about the last of the macro data, this inflation data that we are talking about. It's about the last that the FM has before her, before she spells out the country's next budget details. Already we had some good news on the GDP front. Do you think this December inflation print is going to influence the centre's budget in a more positive way, in a way that will kind of help the growth story become stronger?
Well, certainly it does, Vikram, because at least it is not making the matters worse. Look, I think the worst spot in this scenario would have been had India really touched the double-digit inflation of these 2000s back again, right? That would have been a nightmare. So I think inflation being reasonably contained out here is a good news. I think focus can now get back to, giving the growth impetus, which kind of is so urgently required in Indian economy. Look, we always kind of try and cheer that we are the fastest growing economy. Well, I mean, per capita income is just about $2,000, $2,500 in that range, right? So it's from a low income economy, you always have to focus on growth, right? So and you have to grow the fastest naturally, right? So I think the focus would be back there, and I think budget should be targeting growth, at all levels, right? I understand there is very little leverage for the finance ministers to play, but I think this is a last pre-electoral budget as well. So I expect some populist measures as well. So there is this tight balance that FM will have to run there.
Tight balance is something that both the RBI and the centre are likely to do. Geoff, while much is being made here about India's propensity to grow while the world, including China, slows down, we've seen some evidence of this in the unexpectedly high IIP print as well in recent times. For an emerging market like India right now, one imagines this to be a big boost for the growth story. Would you agree with that? And what are the risks that you see to India's growth right now?
No doubt that's a very important part of the story. I think you've also always got to argue with India that one of the big risks to the growth story is going to be how well the government tackles what is ongoing, always a challenging budget situation. So, to the extent to which you might need some further fiscal tightening, for example, or down the road a significant amount, and how the market would tolerate the situation if you don't get that fiscal tightening would obviously be a concern, I think, on the growth story. I think what's happening so far this year in markets, albeit we're talking about 2 weeks here, is that China's coming back quite strongly. The Chinese market's up 10% in dollar terms this year. And that's partly because I think people have already decided the end of zero COVID is not going to give you a massively damaging spread of COVID through the economy. So people are buying back into the China growth story, and obviously China got beaten up in terms of the market last year. Now, the reason I'm saying all that apropos of India, I think that's raising the risk, I think, in some people's minds that commodity prices could go up again. Of course, pushed up partly by the weaker dollar, and that could impact India, of course, very vulnerable to higher oil prices. But generally, I think the narrative here is that China is slowing sharply, not least because they've got a major population problem long term, and India is the growth story of the emerging markets now, and I expect that to continue. So I think this can all be managed quite well. And even though India's had a slow start to the year in terms of the equity market, I think India does perfectly well in 2023. Because of all these trends that we've discussed.
Anurag, as focused as we are on the possibility of Indian growth in 2023, there is no doubt, taking away from what Geoff is saying as well, we are going to need that support from the US economy to be able to achieve some of those growth targets that we may be setting, but not just India. Global growth as well relies on the American economic engines. Do you believe that lower US inflation, the kind that we are seeing right now, is going to help rejuvenate global markets and help the last street as well move up?
So Vikram, it all depends on the levels where you are at, right? And I think that's an important point you raise. Look, from the 4,800 levels of the peak on 2021, we are already down 20% in US, right? So US has already taken that correction, and NASDAQ was, down handsomely, like 30-35% before bouncing up slightly. It is still about 30% down from the peak levels, right? So US market has taken that healthy correction in 2022. So it's kind of now looking reasonably valued, and where you can try and play around in the range, and then any good news then becomes a good news, right? Once we get past this inflation hurdle. Indian markets have not done that, Vikram. So, we can only, read the news in both perspectives, but, we can say Indian market outperformed almost every major global market last year, 2022, because we rarely corrected. We actually were up 3%. But from there, I think if you are priced to perfection, I mean, look at this basic metric, Vikram. The economy from 2020 to 2022, from 2019 to 22, 3 years, the growth in the economy on a GDP level has been 7.5%, which is barely about 2.5% per year. That's the quantum of GDP growth we have had. And look at the markets, they've grown, all the indexes have grown from maybe 50 to 70%, even now. So I think somewhere there is a moderation needed. Indian market, I hope 2023 is the year where they have a reasonable moderation and a much healthier correction, which is needed for the long term. Otherwise, we run too much ahead of the fundamentals, Vikram.
Run too far ahead of the fundamentals. That's a worry that Anurag has been echoing for a while now when it comes to the Indian markets. Geoff, how do you feel about the American economy right now with the kind of inflation control that the Fed would like to bring in or has been able to? If it keeps climbing down the inflation, then will global equities see a resurgence, you see? Because as far as US inflation is concerned, it has climbed down from 7.5% in January last year to December. We've seen it at 6.5%. So there has been a good trend that the inflation has followed, thanks perhaps in part to the kind of action that the Fed has been able to put in. But as far as the economy is concerned, there has been considerable resilience. The American economy, we look at the jobs data, we've spoken about this in the past as well. Today, of course, we are looking at Wall Street. Dow Jones is taking a cut of about 0.5 percentage point, cutting deeper into the red. The Nasdaq is also taking a hit, and so is the S&P 500, more than 0.5 percentage point on all three indices. But what do you think about the American economy as it stands right now and the possibility of global equities seeing a kind of resurgence on the back of the strength of the US economy?
I'm very bullish about equities in 2023 globally. And I think that the data we had today, frankly, underpins that, because basically the sharp drop in inflation, albeit it was in line with expectations. And I think what's happening with the data today is people are saying, sell the news that maybe the market anticipated this nice drop in inflation, and wait for the Fed to give us their reaction, if you like, and some sort of change in rhetoric. My own view is you're probably going to get another 75 basis points of rate hikes, but we're very close to the peak, and as far as I'm concerned. And I think that's very good for the equity market in 2023. Dollar goes down, bond yields have peaked, and the Fed is very close to ending their tightening campaign, even though I'm not sure they're going to be able to cut rates in 2023. Now, what the economy is doing is a couple of points I made very quickly here. You may well get a mild recession in 2023 in the US, but I think it will be very mild if there's a recession at all. And the bottom line here also is that nobody really understands what's going on with the labor market. Clearly, the labor market's very strong. Job demand is still very high, and yet at the same time, wage inflation is coming down. So I see this as a bit of a Goldilocks scenario, frankly. And even if we get a modest recession in the US economy, with wage inflation coming down, price inflation coming down, the Fed nearly done, the dollar coming down, bond yields coming down, I think it's really, really good news for equities. And all that's happening here is the Fed, we're waiting to see how the Fed reacts. But bottom line is, as I've said before on this program, I'm buying any dips here, and I think equity is going to have a good year, although I think emerging markets will outperform developed markets.
From what I'm hearing from you, Geoff, you seem to be rather bullish, and you've been consistent on that take of yours about the strength of the equities in 2023. As far as Anurag is concerned, he's raised certain questions about the valuations in the Indian markets, and perhaps a correction is what these markets require. Is something that he too has consistently been airing as a view here on India Tonight. Always great getting your perspective on the kind of macro data that we are getting, the impact on the economy and the markets at large. Anurag and Geoff, many thanks for joining us on the show tonight.
Thanks, Vikram.
Now let's tell you about